Let's get some moves by the investment committee. Kevin, you just sold out of John Deere.
Yeah, this is a tough one. We were in Caterpillar and John Deere for the first time ever, and the stock has just broken down. We're looking at revenues coming down. Analysts are lowering their guidance. And one of the things that really concerned us, like Jenny, we look for dividends. We love them. We love dividend growth. But we want to make sure that the dividends are increasing because of earnings growth. And what it seems like is they're taking on a little bit too much debt, maybe to buy back more shares, maybe to increase that dividend. So from our standpoint, we look at the agriculture space in general. We look at our portfolio, and we think this is a price action move, and we're going to get stopped out of John Deere. Love the name and hope that we can get back into it, but never be afraid to take a position out of the portfolio if the mathematics
You
change.
view that as like sort of a sign of macro weakness? I mean, these are truly global companies that you just referenced.
You know, I don't know. I think it's isolated there because we still own Caterpillar, and there's a lot of things to like about Cat at this point. So I think it's a little bit more exclusive to Deere than a big macro picture. Although we have to admit that from a macro perspective, the economy is slowing down. Like that's a fact.
Using the money from Deere to buy more TJX, the parent company of TJ Maxx.
So if we talk about an economy that's slowing down, sometimes off-rack retailers are beneficiaries of it. And we love TJ Maxx. I mean, we talked about it before. It's a stock that doesn't have a huge dividend, but strong dividend growth. And the margins are increasing. The revenues are increasing. If the consumer does trade down, that's a benefit to TJ Maxx. If the economy's strong, I live in Naples. I mean, you can't get into that parking lot when the economy's humming. So this is a stock that's hitting on a lot of the right buttons. They're doing share buybacks. They're increasing the dividend. Margins are going up. Free cash flows at a level we hadn't seen since the pandemic. So on weakness, we had the stock called away at 117. We were able to buy it back at that same level. I like the name.
Liz, is TJX a discounter? I can't figure them out, right? Because you see, I know a lot of people that do well. They love to go there and kind of hunt for the bargains. Because if you look at the discounters, Big Lots, RIP, filing for bankruptcy yesterday, Dollar General, Dollar Tree, right? They've been cut down to size. How do we view a TJX, and what's your take on retail?
I think it's a discounter to the discretionary buyer, the discretionary apparel buyer. So when you think about what's happening in the economy right now, first of all, I think it's confirmed the consumer has traded down, and we're seeing the beneficiaries of that in some of the big box retailers that do cut their prices. But here's where it matters. The messaging to consumers matters. So nobody's living under a rock. Everybody knows that the rate of inflation growth has come down. So I think the expectation now from consumers is that prices will come down as well. So the stores that are benefiting are the ones that are actively lowering prices. Consumers like that. Their volumes are going up. But I do think there's a trade down going on. I do think that it will continue to go on. And right now, we're okay. Consumer spending is still happening. It's still occurring. It's just that people have gotten more careful about where they're doing their spending. But remember, this is a sequence, and this could just be a stop at the balanced level on its way to weak. So let's not declare victory yet that the consumer stays healthy forever.
So that's a really good point. Like, let's not declare victory yet. And that concept is making my job hard. So what I have in the portfolio right now is Kohl's, right? That consumer seems to be holding up. I also am looking at Vail Resorts. And the challenge of actually making an investment in Vail Resorts is like, what consumer does hold up? How do they flesh out? Who really gets punished? I read a really interesting article the other day comparing Dollar General and Walmart. Like, why did Walmart do well while Dollar General stumbled? And what they saw was the lowest earners who were shopping at Walmart now had to downgrade and go to Dollar General, and they're desperate, right, for the biggest bargains they could. So it's just an interesting thing to flesh out. One thing on TJX, sorry, can I just say, I used to own this company called Tanger Outlets, right, and they're the big outlets. And the old CEO, Steve Tanger, used to say, in good times, everyone loves a bargain. In bad times, everyone needs a bargain. So to your point on TJX, like, it probably holds up.
All we ever hear is about how good the high-end consumer is doing. Very quickly, you're into my world now. Skiing Vail Mountain itself, second to none in the world.
Yep.
Love Pete's back in the weeds in the back. Love it. Stock's down 28% a year.
Right.
$300 for a one-day lift ticket now.
Okay, but it's got an almost 4.5%, about a 4.5%, almost 5% dividend yield because of that, so it comes into play. That $300 lift ticket, this is just interesting. They're doing that to push you into buying the Epic Pass, to make it a subscription business and smooth out their earnings. It's a cool strategy.
Got to get the Epic. Limit the amount of them, though, which I understand, but we'll talk more about Vail at some point, maybe.